We are live.
Perfect. Hi, everyone. I would suggest we wait another few seconds. So probably some more people will join, and then we will kick everything off in a few seconds. So let's just wait, let's say 1 more minute, and then we are good to go. Okay, let's kick it off. Yeah. First of all, thank you all for joining us today. Really glad that all of you are here, and especially very happy that we can welcome two very outstanding guests with Stefan and Chris, two very renowned and active investors in the startup ecosystem. But before we deep dive in their intro and in the webinar itself, a few organizational things. So what we will do today, so after a short intro from Stefan and Chris, we will have 3 focused blocks where the 3 of us go deep on different aspects of angel investing and syndicate leading. And at the end, we will have for sure at least 15 or 20 minutes for a dedicated Q&A session. So if you have already a question come to your mind at any point during the session, feel free to just post it here in the question section underneath. In that section, you can also upvote each and every question. So in the end, we will of course start with the most important question to answer. So we will then make sure for sure that we answer as many as possible. But let me also take at least 30 seconds to very quickly introduce Roundtable and also myself. What does Roundtable do? Roundtable structured investments into the private market, either by doing entire venture capital funds as a service, or through a deal-by-deal approach using SPVs to syndicate investments. We've already structured more than 1 billion in syndicate investments across Europe and beyond. I personally co-lead the DACH market at Roundtable, and working directly with investors, with angels, syndicate leads, and a lot of founders across Germany, Austria, and Switzerland every day. But honestly, enough about me, enough about Roundtable. Let's get to the very interesting part, which is, of course, Stefan and Chris. So, Stefan, I'll start with you. Maybe a brief introduction from your side. So feel free to deep dive in your background, what you're doing. Happy to hear about it.
Cool. Thanks, Christian. Hey, I'm an entrepreneur, kind of turned investor. I started my first company out of university in 1999. So hey, I'm an old guy. So I've been through a couple of waves of entrepreneurship. And the first company I founded kind of turned out to be a failure in a way that it never really did a huge exit, but it was a success in a way that it produced a nice dividend each year. And I started angel investing from those proceeds at some point, and at some point started starting new companies. One of those companies brought me from the Rhineland in Germany, where I'm originally from, to Berlin, because Berlin was the kind of the hip place to be, and was like 2010. We sold that company to Secret Escapes, built a $500 million turnover business here in Germany for Secret Escapes, had a lot of fun doing that. And at some point, I started doing more in kind of angel investments, more or less all over the place. I started a brewery and a community for mothers. But my original company hails from the recruiting world. So I thought at some point, why don't I reconnect with the people that I know kind of in the HR and work tech space? And we met at an industry fair over a dinner, basically, and we said, why don't we share startup opportunities in a WhatsApp group and see if we can kind of give back to the community and start doing a few investments. And out of that grew kind of an angel syndicate focused on work tech, originally HR tech, but now everything that is to do with the future of work. And now with 60 people, we made about 32 investments in total. And at some point, because it was a bit of a loose thing, at some point we started doing SPVs together with Roundtable. And that's what we still do. I also have, this is my startup side. I also do kind of German Mittelstand succession deals. We kind of buy small profitable companies, roll them up into a bigger group. So that's kind of my other side of things that I also do. But from the kind of angel investing turned syndicate lead side, I'm very focused on work tech.
Perfect. Thanks, Stefan. Maybe one quick follow-up question, because you already mentioned you're wearing a lot of different hats all day. So you have, I don't know, you're angel investor, syndicate, LP in funds, you're on multiple boards, and so on and so on. So how do you actually kind of decide where to put your time and conviction, and which roles give you the most energy?
I mean, the honest answer is it's basically adapting all the time. I started the focus on HR tech because I wanted to stand for one thing and not a bunch of things, and that really helped to get better access to entrepreneurs and co-investors and so on. So it really helped to focus, and so that helped me kind of focus my energy. At the end of the day, I'm still an entrepreneur. I work with people that I enjoy working with, and that's where most of my energy goes. And that's how I haven't always done this, but I kind of learned that's where if I make an investment, it's typically into a relationship with a person that I want to work with, that I can also learn from, that I can share what I've learned, but I can learn from, and I'm just intellectually curious to find out how they'll tackle their problems and what problems they can solve.
Okay, thanks. And then, of course, over to you, Chris. Also, of course, very, very happy to have you here. Maybe then also a quick intro from your side.
Thank you for having me. Quick intro. So I am both an investor turned founder and a founder turned investor. I actually started my career as a VC at Speed Invest in the early stage team focused on fintech investments. I was at Speed Invest in venture investing for 5 years before starting my first company in 2020. There was a fintech company called Airbank. We built open banking software for businesses, mostly small and medium-sized businesses, but also startups. We exited the company 2.5 years ago to another fintech company, a credit card issuer. Basically, when I left Speed Invest, the fund, I still had a lot of deal flow coming my way, and I was still extremely passionate about investing in startups, supporting founders. And so I started angel investing, and that grew into my own community. And over the years, I built more than 10 SPVs with Roundtable together. And I now started another startup just this year. So I'm really focused on building my own company. And I'm very selective in the investments I do. And so I really like the infrastructure and the platform that Roundtable provides to us, because it really allows me to focus on my day job. And in the community, we invest across sectors. We try to be as early as possible. Did a couple of investments in fintech, in healthcare, but also in AI. And over the years, I made quite a lot of angel investments. I think it must have been more than 50 over the years. We now do all the investments through SPVs. I think that really creates a lot of incentive alignment also between the investors and me.
Perfect. And maybe also one follow-up question. I mean, I've also been founder on my own, and I think I also learned quite a lot when being a founder, things which could be helpful as an investor. So therefore, as you've seen both sides of the table, is there anything what you only understood about investing after you actually built a company?
Definitely. I think actually it goes both ways. I believe that having been a founder makes me a better investor, but also having been an investor makes me a better founder or operator. I think the investor perspective is also quite useful in knowing what to target, what KPIs to look for, and so forth. But definitely even more the other way around. I think having been in the field and building a company, seeing all the challenges in building product market fit, in hiring, I think that gives you much better perspective as an investor. You can be much more helpful to the entrepreneur, to the founder. And I think above everything else, even more than giving the right guidance, you have a much better sort of emotional understanding, much more empathy for the entrepreneurial journey. So I think that's definitely good to have for all investors.
Perfect. Thanks also for that, Chris. So then, I mean, after having you guys introduced, we saw that you've started companies, you backed companies, you built communities, led deals, whatever. So let's use the next minutes to deep dive in everything, what it means to go from an angel to a syndicate lead. So then probably I'll start again with you, Stefan, and then play a little bit the ball here and there. So is there, or was there any point, you mentioned it already, I think briefly in your intro, at what point did angel investing kind of stopped feeling enough for you, and was there a specific trigger that you made start pulling your co-investors into your deals?
I think it was I think it's two things. So as I said, it's kind of these standing for one topic makes it easier for everybody in the industry to say, okay, Stefan is the HR guy. Like if you see a fantastic HR tech, work tech, and also AI founder that is changing how people work, then you got to talk to Stefan, because he has this network of people, and he has, there's a website, worktechangels.com, and it's so standing for one thing makes it easier to get access to the best deals, the best founders, and other co-investors who also say, okay, that's an hypothesis that I want to be a part of. The other is, once you have that kind of PR side to it and you stand for one thing, then you're better at diligencing deals if you have a group of people with you, especially if it's a specific industry, because, if, I don't know, if it's HR software, I can ask 3 guys who've built HR software. If it's AI, I can ask 3 guys who've built AI systems. If if it's recruiting, I can talk to 3 recruiting guys. And so we get a better understanding of what to invest into, and then also how to support the founder with the experience of the whole group. If they have a specific question on, I don't know, GDPR and HR systems, we can ask in the group, has somebody solved this? And then we can support. So this is kind of from being the lone wolf as a single investor to kind of having a whole wolf pack that is fighting along you.
Okay, perfect, thanks. And Chris, how about you? Was like the syndicate model kind of planned for your investments, or how did it evolve over time?
So first of all, I can only agree with what Stefan said. I think it's good to pull in different people for specific deals. That's also what I like to do. So for example, I invested into a legal AI company about 1.5 years ago. And for that specific deal, I reached out to a lot of friends and friends of friends who are lawyers, who have legal background, and I tried to get their input. Definitely helped us better diligence the company, but also later on when we invested, we had those awesome people with legal background in the SPV, and they can be really helpful and make a difference for that specific company. And that's also what we did in other areas like healthcare and fintech. I always try to bring in people with experience and thereby add more value to the company. So that's one. And the other aspect, an argument for SPVs, I believe, is size. When I started with angel investing and I put in my own money only, which was typically a check of 5 to 10 or 20K, it's not typically the size that can make a huge difference to the founders. And nowadays, when I talk to founders and I can soft commit much bigger checks between 200K and 1 million, that clearly changes our significance, also the position we have in the company, our relationship with the founder. I think it really helps us get into the most competitive deals. So in the earlier stages, of course, you often can access with 20 to 100K check sizes, but we also did some investments in seed, late seed, Series A. With some of those companies, they've been oversubscribed, even multiple times oversubscribed. And with our community really committing larger check sizes, we had a better position.
Got it. And when you mentioned the larger check sizes, bigger tickets you can write as a community. And is there anything else as a syndicate compared to being a solo angel investor? What is more as an advantage? So, for instance, I don't know, more influence with the founder, or better access to deals, or anything else which I'm not thinking of?
I do believe that the deal-by-deal structure, which again allows us to pull in different people with relevant backgrounds, enables us to do exactly that and add more value to the founder. When you compare this to a fund setup, for example, micro VC, then of course I wouldn't have the possibility to bring a couple of relevant people into that specific deal. But I think overall, of course, there are pros and cons of both models. I'm very happy with the deal-by-deal setup. I also believe it differentiates us against so many other investors out there. I also offer to the founders of the startups that we want to invest in that they can also bring in a couple of people into the SPV, which avoids them having a fragmented cap table. I allow them to come into the same SPV, and overall I believe it has a lot of benefits. And since I do the angel investments and SPVs on the side, my day job is really running my own startup. I think it's good to have such a flexible structure. I don't have any deployment pressure. I only invest when I'm really, really excited about a company and I really believe in that company. I don't have to deploy a whole fund and invest a certain amount in any given year. I believe that's a huge advantage. It definitely makes our investments more focused, more selective, and hopefully that will pay off in the long run.
Perfect.
And if I could just add, I second very much what Chris has said in terms of not just the comparison to a single investor, but I actually did toy with the idea of building a fund myself and taking on the whole, reporting and everything and compliance and all these things. And I was very close to actually doing that. But then I kind of looked deep inside of me. Am I a fund manager or am I an entrepreneur? And I'm an entrepreneur. So I have the flexibility to, if I kind of travel around the world with my family for a year, I don't have to take care of the fund. I can be flexible. And if I see 3 great deals in 1 week, I can do 3 deals. So it's kind of for kind of an entrepreneur turned investor entrepreneur. It's kind of the better setup, I guess.
Yeah, fully agree. I mean, it always depends on your person or on the situation, but as you describe it, totally agree. Do you both see any, or is there any biggest misconception other investors or angels have what it actually means to lead a syndicate? Whoever wants to start.
I mean, the only thing that I can immediately think of, I don't want to turn like we're sounding like Roundtable fanboys, but what I actually,
are a lot.
but what I did actually find out is the fact that it's so easy to set up and administer and run, and we don't have to go to the notary, and people can vote on the platform and stuff like this. I was positively surprised that makes the job so much easier.
I also believe that I don't have to explain the model a lot. I think the model is very simple, and when you go through the process, when you receive an invite link to a Roundtable deal page, I think it's all so intuitive that actually there are not many questions that come up.
Do you think, I mean, that's sometimes I hear from founders, is there still sometimes a question or the argument from potential co-investors, but I want to be directly on the cap table? Is there still a valid argument, or how do you kind of conquer this argument, if so?
I mean, I have a strong view now after having had to deal with unpooled angels on the cap table several times, and it always creates a mess. I'm not going into any investment where the angels aren't pooled, and I actually think it's the best way to pool them. So for me, I mean, like a huge investor wants to be on the cap table, but as a relatively small investor, I basically believe your job is to be there to support the company, to not, bicker around with nonsense and not make things complicated. So, and for that, it's in everybody's interest that not a single person can block anything.
I can only agree. So we also try to put everyone into the SPVs, and sometimes there can be exceptions, but typically only for large investors who commit 100K plus, for example. And otherwise, I believe that there are benefits for like all the parties of having that structure. And I think even in such a structure with an SPV, there's still the possibility, for example, to do secondaries a couple years down the road. So typically, when you explain that structure, everyone is also fine with it.
Perfect. Then, I mean, as both of you mentioned, you kind of build up your own communities around you. So let's now in the next few minutes talk a little bit about communities, building, maintaining them. So maybe starting with you, Stefan. You kind of founded formerly HR Angels, now WorkTech Angels, as you already mentioned. I mean, very active community in the WorkTech space, obviously. And how do you actually decide who belongs in your co-investor circle and who doesn't, and what makes the cut? And even is there also the case some people kind of have to leave your community at some point because they get inactive or such?
Yeah, that's, to be honest, we haven't quite sorted it out. In the beginning, it was very open. So basically, I met everybody over a lunch or a dinner, and and it's kind of easy to say, yeah, of course, if I see fantastic deals, then I'll invest. What I did learn is also that a lot of people kind of are free riding and didn't actually invest over 2 years. So now we made it a little stricter. We make sure that everybody who is part of the community also is actively investing, and kind of we have a rule, I forgot what it is, but it's kind of like you have to make at least one investment a year. You have to have good reasons to not invest. So we become a little stricter because I think a smaller, more active group is actually more powerful than a larger passive group. Mm-hmm. The other thing we kind of like 90% of our members are entrepreneurs. So they built a company, made some money, and are now investing. A few are kind of industry people, so CHROs, people who understand the space but haven't been entrepreneurs themselves. So this is a bit of a question if we kind of want to go deep into people with industry experience but not entrepreneur experience. Because, and for that, actually, an SPV, again, coming back to my earlier point about pooling, is quite useful because people are kind of forced into a structure. You don't have to explain how angel investing works each and every time, but it is a bit of a educational journey for people who haven't had much exposure on how to build a tech company and invest into tech companies. So that's a bit of a, we have still to figure out how much we're going outside of people who understand how angel investing works.
Good. How about your community, Chris?
So the community that I run is called Future Fund, and we now have about 200 members. It's mostly founders, C-level, entrepreneurs, a couple of family offices, and we, of course, we like everyone to be active, and I see when I launch a new deal that within just a couple of hours, I can see how many people have viewed that specific deal, and yeah, I think that's really great. I can also agree it's better to have a smaller active community than a very large one. We try to be selective. We try to have people in the community who actively want to invest and support. And that worked out really well so far. We typically don't exclude anyone except if they violate some of the few rules that we set up, which includes to not share any sensitive information with externals, not to reach out to the founders directly, because that's just unnecessary additional workload for the founders. We don't want to distract them. Yeah, it worked out really well so far. The community is still growing. It's also growing with every single new deal that we make, because as explained earlier, we try to bring in relevant people, and we often add people into the community for a specific company, for example, when investing in legal tech, but then those people made their first investments, they see the company is performing well, and then over time they are also interested in investing into other opportunities through our community, and therefore the community is growing every week, every month.
Amazing. And I mean, you mentioned the community is quite large, at least from my point of view. And I mean, what would you say beyond the deal access? What do your co-investors actually get from kind of following you? And other question, how do you keep them kind of engaged between each and every deal? Starting with you, Chris. Sorry.
Sure. So we're really focused on the investment opportunities. We don't do any events. We don't do any newsletters. We are really focused on bringing together relevant people for specific investments. And you're right, 200 people. That's already quite a size. Typically, in the average deal, I would say between 20 and 50 people actually commit. But there are many different reasons why a member of the community invests into one company, but not the next one. And I believe that's another benefit of the deal-by-deal structure. I don't have to take the investment decision on behalf of the fund and force everyone into an investment that they might not like. And I believe that creates discipline, and ultimately everyone is responsible for the decisions that they have taken, and it works out well.
Perfect. Stefan, maybe anything to add or to disagree?
Yeah, we do it a little differently in a way that we do actually do events, and we meet at industry events, but that's probably more because of this industry focus, and there's also this aspect of people want to network within the industry aside from the investing side. So we meet at least 2, 3, 4 times a year, one or the other event.
Perfect. I mean, we touched this already, like very briefly. That at least you said, Chris, that you have some rules in your community. But starting with you, Stefan, have you ever had the situation that one of the co-investors kind of became difficult and kind of completely disagreed with something in your syndicate, in your community? If so, how did you actually handle it?
Not since we do SPVs. Before, yes, of course. And I mean, to be honest, So I've been a founder and investor for more than 30 years now. So you kind of see everything. Like I've seen, and what always happens. So nobody talks about this, right? So any startup founder runs into fighting with his co-founder, fighting with his. There's always a crazy one on the cap table. So fighting with an investor, going into personal struggles, burnout, whatever. So there are always these challenging moments in kind of the roller coaster that is being a founder, and I kind of try to be that guy that fights in their corner when shit hits the fan. So they typically call me and then say, how would you deal with this difficult person? And then I'm a pretty chilled guy, so I kind of have a chat with people and explain how the world works, or what are the what happens if they make it complicated. So typically that's a good and grown up talk that typically resolves most issues. At least that's my approach to it.
Perfect. Chris, anything on your end?
I would say we never really had any serious issues or problems with investors in our community. We maybe had one or two situations where an investor wanted to go around the platform and invest into a company directly. I guess also to save some of the fees or to get direct access, but that was exactly what the founder didn't want. They wanted to work with us and give us as future fund the exclusive possibility to pool other angels, and that's why it worked out well. But that was the one situation where we set up sort of our rule book, and if you don't follow the rules, then you get kicked out of the community. But I think that won't happen again.
Maybe one of you can walk us through one of your recent deals. We don't need to name them, but just like for everyone to get kind of an understanding how it looked like. So from the very first conversation with the founder to a fully closed SPV, what did the timeline and kind of the process looks like usually? Does it take days, weeks?
I'm happy to. So the one I did last summer, it was because I was already invested into the company. I had access to the next round. I wanted to bring in, and the founder asked me, "Can you bring in more people from the HR space? Kind of, you've been a great investor. Are there more people like you?" I sent it. This was our first SPV we did with you guys, and basically you set it up. You kind of do the KYC, AML stuff. I think back then it was still a bit shaky. I think the technology has improved quite a bit, and I kind of sent it out to people, and then, because it was time pressure, it was a matter of days. I think typically there was also a question about how much time do you give for a deal, because the KYC takes a little bit of time. And we had this rare case where there was an Austrian person who was traveling, and we had to get the passport, whatever. It took a little bit, but we managed it. So it was a lot of being on the phone, and you and the team really had a lot getting it done. But in this case, I think it was a matter of days, like maybe 10 days maximum, but it could have been 5 without the KYC.
So you also say the responsibility in your responsiveness in your community is like your co-investors, they decide actually within days if they want to co-invest or not.
Yeah. We typically set up a call with the management, with the founders. That is like 2 options within the next 3 to 4 days. You either join the call or you don't, and then people make up their minds.
For you, Chris, in your community, anything different?
Very similar. We can be fast, and we did deals in a week or so. But typically we like to keep it open for a bit longer, let's say 10 to 14 days to really optimize on the amounts that we can bring to the table, and give everyone also the time to think and reflect and make up their minds. But typically we keep it open for a bit more than a week, about 2 weeks, and then the closing process with signatures and payment collection that takes about another 2 days, 3 days.
Amazing. And then maybe before we then probably in the next minutes go to the Q&A section, one quite interesting question. I mean, maybe I can, before I give you some information, how also the monetization for Syndicate leads at least works on Roundtable. So on Roundtable, you basically have 2 options of monetizing your deals. Basically, you can have carried interest. So basically, of course, don't need to explain that. You can benefit from the profits, from the future profits of your co-investors, and you can take an entry fee. So for instance, whatever 1%, 2% of the overall investment amount goes into your pocket, because you might have whatever, quite an effort, quite additional, maybe also costs, blah, blah, blah. What's your kind of fee model? I mean, happy if you don't want to share it, also fine. And would you say is carried interest or this kind of fee still kind of a taboo in Germany or in the DACH region? Maybe Chris, starting with you.
Sure. So we typically don't charge any entry fee, no management fee, but we charge the performance fee, the carried interest of 20% on a deal-to-deal basis. And I believe that's a good setup. It creates incentive alignment. I think it is fair, and our investors also could consider it to be fair. It only gets paid if the company is performing well, and therefore it's accepted, and it definitely motivates me to find and select the best companies out there. Since I do the community management and angel investing on the side, but I have a different day job, I don't charge any setup fees or management fees. I think always depends on the circumstances. Other people who do angel investing sort of on a primary basis and full-time basis, they might might choose to charge extra fees, but for us it's just a performance fee.
Yeah, same here. We do 20% carry. We share that carry with, if there's a deal lead from the group who brings in a deal. There was a little bit of pushback on the carry because people say, we're industry insiders, we add so much value, blah, blah, blah. But I think it's basically been accepted. Maybe 1 or 2 people are not going to do it, but it's basically been accepted. They want to compare it to like a professionally managed fund, but then they realize, we don't pay a management fee. And there was a little bit of a discussion whether there should be a hurdle rate. I think this is all acceptable. End of the day, we're not. I mean, it's not our main job. We're not gonna get stinky rich just by that, but it helps to have a little bit of an upside for doing all the work and investing all of your network. So I think it's fair.
Perfect. I mean, almost perfectly on time. So we still have 15 minutes for the Q&A section, because I saw there's quite a lot of questions from the audience. So what I would do, I'll go question by question, and then the 3 of us we can answer them. Of course, mainly you guys, and we'll start with the one having the most upvotes. So start with the one from Felix Bayer. If you already have great access to founders, how would you get together an angel syndicate and convince angels to invest in your angel syndicate? Any direct feedback? I mean, I guess we more or less answered that already during the session. Correct? Or anything to add from you guys?
I mean, for me, it's people from the industry. So we kind of, whenever I meet somebody who is from the industry and is interested to invest, and kind of take them into the group. But we're not a public community, so maybe it's a little different to Chris's setup.
Yeah, I mean, my setup grew over time. The first couple of SPVs that we did about 3 or 4 years ago, they've been much smaller than today. We started with about 100 or 150K, and back then there were just 20 people in the community. You have to start somewhere. And talk to people whom you know they might have an interest to invest. And over time, our community expanded, and now it's 200 people, and the largest investment we made so far was about 1 million in an Austrian company. Yeah, my recommendation would really be to start somewhere. Another opportunity might be to talk to some other SPV leads on the Roundtable platform and do a co-syndicate. That's also what I did a couple of times in the last year. So I joined forces with other people. We set up an SPV together. That definitely gives you sort of a minimum threshold of investors or commitments that you can communicate back to the founders of the target companies. And over time, you'll build up your own investor base.
Perfect. Thanks. Maybe then next one, but this one is already answered, Lionel. So we're with the most votes. What are the economics of your group, Stefan? We already answered that. So I would skip that. Yeah, but that's next one. Can you be specific about exact amount you guys have raised? So do you ask for board seats? What performance did you get on the investment? And has there been any hit or miss ratio? I mean, of course, you don't need to share everything. Everything what you want to share, share it. Yeah.
I mean, for me, it's kind of top of mind because we just had an update to the group. So we did 32 investments. This was not all of them through Roundtable, many outside of Roundtable. Over the last 2.5 years, I don't know. So I think 90% of the companies are still around. There are a few misses that kind of entered the graveyard. I think we had a 1.5x return on paper. So that's kind of, yeah, and I don't know the exact amount. It would probably be, I don't know, maybe in total, like, again, 32 investments. It was probably, many were pretty small before we did the Roundtable SPVs. So it's probably 2 million, maybe 3 million.
Okay. Chris, anything to add from you?
Definitely. I think the honest truth and my biggest learning from having been a VC is it's really all about finding the outliers. And I don't care that much about companies that will exit in 3 to 5 years with a multiple of 2, 3, 4x. It's really about finding the companies that return 10x, 20x, 100x, even 1000x. And I think we've been also very lucky with the community. We invested into one company that just turned a unicorn and is performing really, really well. And let's say another 3 or 4 which are definitely on track and doing really, really well. And I believe for all the investors also in my community, I say it's about being in those right deals. And I think that's therefore for investors in my community, it also makes sense to spread and to diversify and to be part of different SPVs, because you don't want to miss that one company that might deliver a 100x return.
Perfect. Maybe then this one here from Andrea. How do you market yourself in the market when you start building the community? Can you give an example of a conversation, not a very early adopters, and say, hey, no, I work with conviction? I mean, also like for instance, just to explain, on Roundtable, there's also different kind of communities. So if you have you can have a private community, so no one on Roundtable sees it, but you can also have a public community after several deals you've made. So basically every user on Roundtable sees this community and could at least request access to your community. So there's also kind of a marketing instrument at some point. Yeah, but anything from you guys, how you market your syndicate in the market?
So we actually don't market ourselves at all. I always put the companies into the center, the companies that we want to invest into. And when I reach out to potential new investors or members of my community, I make the conversation always centered around that opportunity that we want to invest in. But maybe that's just how I work. I don't want to promote myself too much. I believe if you have a community which is more centered around a theme, like Stefan's community, then of course it makes much more sense and you can have a conversation about the theme and the thesis. But for me, since I'm very agnostic and I invest across stages and sectors, I really want to center the conversation around the individual opportunities.
Yeah. I mean, for you, Stefan, it's probably you're very industry focused, so you kind of know in the meantime everyone in WorkTech and they know you're the guy to go to, I assume.
Yeah, I mean, on both sides, kind of marketing towards founders and marketing towards more investors. We can focus very much on we go to industry events. We have a partnership with industry media. So it's difficult. We go on podcasts like industry podcasts. It's difficult to miss us in that industry, at least in the DACH region, which also gives us an opportunity for if a startup from abroad wants to come into the region, to look for people who can, who know the industry here, and we can, that's one way of getting into deals. Yeah, that's basically, basically the pitch is, if you are from the WorkTech industry, if you have any experience there and you want to have exposure to, innovative technologies and young founders, you should be a member of the community.
Perfect. Then maybe this one, how do you deal with the fact that some people in the group do all the work and others are just passengers? I mean, obviously, you guys do charge carried interest, and maybe adding here, you could also split carried interest, right? If there's like one other person doing a lot of work for the deal in the due diligence or whatever, you can also share the carried interest with several people. So that's also just an opportunity or feature on Roundtable. But anything from you guys to add?
Yeah, I very much believe in give, take. So for the last 2.5 years, it was basically giving and providing opportunity and believing that somehow it'll pay back in I don't know, karma points or other ways. So I'm not too stressed that that there's like a mismatch, that there's free riders and people doing all the work. I'm not too stressed about it. I'm a free rider in other communities, so it's fine. And there's Carrie, that also helps.
Absolutely, same for me. I think most investors wanna make a good investment, and everyone is happy to help and support when they can help. But if they don't have specific value add, then it's also fine to be passive.
Perfect. And then next one from Tobias. Even though we have a great network, a high quality deal flow, as always, is one of our biggest challenges. Do you have any hands-on advice how to manage deal flow to ensure targeted conversion rates of roughly 1%? Who wants to start? Where's the bigger deal flow? Anything also from your speed invest time?
So
Chris?
the way we operate is really we don't actively look for new companies. I get a lot of deal flows inbound, and I have conversations with the founders. And typically, when I talk to those founders, they are raising and they want us in. We never really had that issue that we couldn't convert. That's very different, I believe, to the deal flow management in a VC, where it's all structured and where you actively chase for companies. We operate in a different way.
Yeah, I would second that. And as you said, for me, I just want to make sure I'm not missing the one great company, and it's not so like I don't have to see 100 companies that are mediocre. I don't care about a 1% conversion or something. I want to make sure that because we do all this focus on this industry and we do all these things that we are positioned in this way, we want to make sure that if a HR tech serial founder starts the next big thing, already has the VCs lined up, but kind of needs the first couple $100K or has an allotment for angels who can value add, we want to be in that round.
Perfect. Maybe already if I'm looking at the time, last question from Jasper. How do you typically deal with pro rata in follow-up rounds? So do you sell it to funds or fill it with the syndicate? By the way, quick answer by me for the second part at least. So usually one SPV is set up for one round, so you don't mix usually different share types in one SPV, because that will lead to a lot of confusion when there's an exit, because you would mix different liquidation preferences and such. So if there's a new round, there would be a new syndicate. Full stop. But of course, happy about your answer, especially for the first part.
That's exactly how we do it. For a follow-on round, we set up a new SPV. We invite everyone from the community, but we give preference to those people who invested into in the first round. They can take their pro rata, it's their right. We would never sell it to someone else. And if we have a higher target allocation, then we also allow other people in.
Yeah, Stefan?
Nothing to add.
Perfect. It's by the way also quite an often use case on Roundtable that, for instance, I don't know, I did an angel investment X years ago as a solo investor, and now the company did a great progress and is now raising whatever Series B, for instance, and I have quite a significant pro rata right, which I might not use, cannot use, whatever. Therefore, you can set up an SPV and fill it up with your network, and can of course then charge carried interest and have quite even a stronger economical position in that startup. So also quite a nice use case, which you often see. Perfect. So that was already it for 1 hour. So thank everyone for joining us today, and especially thank you, Stefan, thank you, Chris, for answering every question so very well, to give us very good insights in your daily syndicate work, so to say. Thanks so much for that. And I mean, if there's any questions we haven't answered today, sorry, because there were a lot of questions. Only took those ones who were upvoted. Feel free to reach out to me at any time. If you want to start a syndicate, of course, reach out to me, of course, then as well. And thanks so much to all of you. Have a great remaining week, and thanks.
Thank you.
Thank you.
Thanks. Bye-bye.